Things in trading is how you control your risk and how you control your profit-taking systems. Now, everyone is so obsessed with how they get into the market and how they take the trade that they forget just as important is how you exit the trade. But even more important is how you manage risk, because in the end, a trader does not know the outcome of a trade. We are hoping, speculating that it will go in our favor, but the reality is we have to accept it could be a loss. So therefore, part of a professional trader's role is how to professionally manage risk. And as I'm sure you know, you can be a break-even trader in terms of a break-even strategy, but actually overall come out with profits in the market depending on how you manage your positions. If you remember some of my previous videos about the revolving door strategy, we spoke about how a break-even system can actually lead to a lot of profit if you navigate the account correctly. So in the end, this topic of risk management and profit-taking system is essential. Nobody speaks about it, and in this video I want to go through a full case study of a specific trade and show you a key piece of insight that nobody really does but actually makes a world of difference. And hey, in this video I'm not just going to tell you what it is. I think part of the learning process, part of an effective way you will really absorb this information is if I show you first and then tell you, as opposed to just tell you and hope it sticks. So a quick breakdown on how we took this trade. So first of all, you can see EU on the screen. I'm going to be right into M1 just to show you the important portions. But first of all, we have this supply zone over here. We have this run of liquidity zone. We had a build up of liquidity, run of liquidity, and push down. We've identified the order block or refined IFC in there, highlighted as a supply zone. Then the main thing next to do is the Asia range read. We see build up, inducement, push down. What does that tell me? Sellers are in control. Then we see build up and inducement low, push out during Asia low. So that's showing me intent of the buyers, not just to move up as a trap. I'm not going to just simply say this is trendline liquidity, because there's actually intent behind the move. So this is showing me these buyers overpowered the previous sellers and then reaffirmed it here with this inducement low to a push out. So this is showing me buyers are in control. So if I need to take a sell, I need to see significant sellers control supporting that. So what do I see over here? I see a sweep of Asia high with this liquidity over here, with this liquidity over here, sweep of Asia high during my Frankfurt open. And I see that with an inducement and then a small minor inducement over here, build up, inducement, push down. So this is indication that the sellers are in control, overpowering the previous buyer zone and coming all the way down here. So I need to understand, first of all, is this going to be a real supply zone? Or is Frankfurt high going to get induced by London high or London open, which is often a case, therefore a trap? So how do I understand the differences there? I look at the correlating pair, which is going to be obviously GU. So I come onto GU, I look at similar price action. And the only difference here is we had not only Asia high liquidity, we also have previous days high liquidity over here. So this is going to be another liquidity pool supporting Asia high. What do we see over here? Inducement low, attacking this bearish trendline liquidity. Build up of liquidity, inducement low. What is this showing me? Buyers are in control. Buyers are in control. Build up of liquidity, inducement of liquidity, push out, buyers are in control. So there's a lot of buyer's strength, but when we do a medium inducement of previous day high and inducement of Asia high, we have a new inducement and therefore fuel. And I need to understand what is the importance of this Frankfurt open. That not only takes out the previous buyer's inducement zone over here, previous demand, not only does it take out those levels, we actually have a full bearish move down and takes out Asia low. So now I need to think that Asia low run of liquidity, is this buyer's inducement again? So there's a lot of things that are in my mind, but the key here, which you've seen in my public signals, I did a lot of my public trades that I took, live call outs, were using this divergence. So when I see this high on Frankfurt open, that is a higher high and an inducement. Here is not a higher high just yet. And then the next move forms a higher high over here, but over here it does not. It respects. So we have that divergence. Price is going down here and price is going up here. This indicates to me this is a manipulation and therefore this becomes a protected high. This gives me clarity to say this could be a real supply zone based on this EUGU divergence. Now when I see the follow through and I see we have another inducement here and push down, this is supporting to me that this could be the protected high. So even though I have the inducement low, I'm okay with this area. The next thing that I started to think was I had this equal highs build up of liquidity, one touch, two touch, third touch. We had an inducement closing that last imbalance right here. So we've gone to the protected high, closed that last imbalance on London open after doing an inducement of these highs. And then what do we see right after that? Break of structure, where we have high, small higher low, higher high, lower low. So that shift in structure that we can see, ever so slight, leads to this refined IFC over here with the imbalance, and that's the area I was looking to execute the trade. That's what you saw me think and actually execute upon in terms of a sell limit. Now, this is where things got interesting, because as I started to play price action, price started to retrace into that area, and then once again I need to pull up EU. So here when I'm looking at price action side by side, right here at 8:18 a.m. At 8:18 a.m., what is price doing here? We're forming a high, then a higher high. So we have a divergence, because here we have a high and then a lower high. So when one is going up and the other one is going down, that temporary depeg, just like it happened before, shows me signs of a manipulation and therefore real intent. So if I see that this is the protected high based on the previous divergence, this is cleared that high and there's a supply zone right above, I'm thinking this is a temporary inducement up to grab stop losses, tap into that supply zone and then come lower anyway. So when I look at my preferred pair and I see us doing this high and then lower high, this is showing me this is a real mitigation. This is a manipulation on EU, and therefore I'm safe to